If you commonly trade penny stocks, you may come into a stock that does a reverse split. Or maybe you are holding a stock that has done a reverse split, which is why you came to this video. And it can be a confusing experience the first time it happens to you. So in this video, I'm going to explain what a reverse split is, why a company would do one, and how it affects you as an investor if you own a company or maybe think about owning a company that goes through one. In order to understand what a reverse split is, you have to know that each company out there listed on the stock exchange has a fixed number of shares available to trade. So when investors and traders are buying and selling shares, we are all exchanging shares with each other out of this one collective pool of shares. It could be 100,000 shares, 2 million shares, or could be 10 billion shares. The company decides this amount based on a number of reasons, but just know that this number of available shares theoretically doesn't change. It's a fixed number. So this fixed number of shares is called the outstanding shares. It's the total amount of shares a company is divided into. Now, each of these shares are going to be associated with a price. And if we take the total number of shares that a company has and multiply it by the price of one share, then we would get the total dollar market value of that company, which is called the market capitalization. So if a company has 1 million outstanding shares, or in other words, total shares, and each share is worth $10, then that is a $10 million company. If a company has 10 billion shares and each share is priced at $30, then that is a $300 billion company. So let's say that company ABC here has 20 million outstanding shares and each share is priced at $5. If they have 20 million shares, each priced at $5, what is the total worth of company ABC? Is going to be 100 million. Now, based on the performance of the company, the public is going to decide what the price of company ABC shares are worth as time goes on. So this is how stock prices go up and down. If company ABC is performing really well, meaning they are increasing their sales, they are coming out with new and good products, they are making money, then more investors will want to buy and get a piece of those 20 million shares, driving the price of those shares up. But if company ABC performs very poorly, then investors who may own shares of this 20 million share pool, they're going to want to sell them, causing the price to go down. So from our example, company ABC had a share price of $5, but let's say over the years that their performance hasn't been very good. Maybe their sales revenue is declining. Maybe their debt is increasing. Maybe they are having tons of legal problems. I mean, there could be all kinds of problems going on. But in the eyes of investors, that's not a good sign. So in turn, the share price is going to decline. So let's say here that it declines all the way down to 75 cents per share. Now, this is why a company may decide to do a reverse split. The major exchanges such as the NASDAQ or the New York Stock Exchange have minimum share price rules, meaning if a company's share price does not trade over $1 for a certain period of time, then it will be delisted from the major stock exchange. This is not what a company wants. They want to be listed on the major exchanges because that is where the majority of investors are at. Not only do they need to keep the share price up to meet these minimum requirements, but many institutional investors are actually prohibited from trading stocks below $5. So in order for the company to meet requirements and also still look attractive to the big investors, they need to increase their share price. But if the company is not performing well, then investors are not going to be buying its stock, and therefore the price isn't going to go up. So what the company can do is artificially raise the stock price up by performing what is called a reverse split. So this is how this works. At the current moment, company ABC has 20 million outstanding shares, and each share is priced at 75 cents. What is the market cap, or in other words, the total worth of this company? Now, feel free to pause the video, grab a calculator, and figure it out. We're going to multiply the outstanding shares of 20 million times the price per share of 75 cents. It's going to give us $15 million. Company ABC at this moment is worth $15 million. We can't magically turn company ABC into a $40 million worth company overnight. So the market cap can't change. But what we can change is the number of shares available, which in turn will change the price per share. Because the number of shares and the current price combined still have to reflect the company's overall value. So company ABC, let's say that they decide they want to increase the share price by 10 times the current price. So they want to go from 75 cents per share to $7.50 per share. Remember, company ABC is still a $15 million company. So in order for the new price of $7.50 to match the company worth, the number of outstanding shares has to change. Since they increased the price by a multiple of 10, they need to divide the outstanding shares by 10. So company ABC went from having 20 million shares available to 2 million shares available. Now, even though the share price rose to $7.50, the company value or worth didn't change because the outstanding shares decreased, still reflecting a $15 million company. So this is how it looks like from an investor's perspective if they were holding some shares of company ABC as they perform a reverse split. From our example, ABC started with 20 million shares, but they divided the total amount of shares by 10, leaving the new total amount of available shares to 2 million. This is what is called a 1-for-10 reverse split. For every 10 shares, the company is going to replace them with 1 share. Companies can decide to do a 1-for-2 reverse split, meaning they divided the number of current outstanding shares by 2. They can decide to do a 1-to-50 reverse split, meaning they divide the current outstanding shares by 50. They can choose whatever number they want. But whatever number they choose to divide the outstanding shares with, whether it's 2, 10, 15, 75, 100, the total amount of shares you currently hold as an investor will be divided by the same amount. So in company ABC's case, where they divided the current amount of shares by 10, creating a 1-for-10 reverse split, if you had 10 shares before the split, you will now have 1 share after the split. If you had 500 shares before the split, you will now have 50 shares after the split. And a common thought to someone that doesn't know what a reverse split is, it's easy to think, well, that's not fair. The price gained 1,000% and I'm missing my shares, or my broker took shares away from me. I could make so much money if I had my full position. What's going on? Yeah, I know it can be confusing at first, but you have to remember that splits are a way to change the price but still reflect the same value. So everyone that is holding shares of company ABC, the amount of shares they own will decrease, but the price will increase to still reflect the same dollar value of their position. So if you had 100 shares at 75 cents, your total position worth was $75, right? 100 times 75 cents equals $75. And after the reverse split, you would have 10 shares, but the price would be $7.50, leaving you still with a total position worth of $75. The price and the shares change, but the value will always stay the same. Okay, so this is what it looks like from a charting perspective because it can be confusing. A lot of people think that the charts are all going to be messed up. They're not. The only thing that's going to change on a chart is the price. The candlesticks here, the candlesticks, the wicks, the support and resistance. If you've drawn support and resistance lines already on a chart and it goes through a reverse split, none of this is going to change. The patterns, the candlesticks, the support and resistance, none of that is going to change. The only thing that's going to change is the price over here. So whenever a company decides to do a reverse split, they make this announcement and they tell all the people and in this charting platform, I mean they know what's going on with stocks and they update. So whatever the reverse split is, these charting platforms are going to update the new price. So as you see, the all-time highs of this stock, if you were looking at this chart, is up here at around $212. This stock never actually traded at $212. And the reason why is because it went through a couple reverse splits. And you can tell that by looking at these couple of S's down here. So if we click on this S, February 6, 2019, it did a 1 for 10 reverse split. So whatever the price was on February 5th, it increased by 10. Okay, so when it increases by 10, the charts have to increase by 10 as well. Back here on June 16th, 2015, it did a 2 for 5 split. So for every 5 shares that a investor was holding at that time, those 5 shares were taken away and they were given back 2 shares. But the price changes to still reflect the same value. So don't be alarmed if you have all these drawings on a stock and then they do some kind of split. It's not going to mess up anything. Again, the only thing that changes is the price scale on the right side over here. That's the only thing. The charts are still going to be reflected the same way. Okay. So it's important to remember whenever you get involved in a reverse split, they're not going to affect the investor in a dollar sense. But it is important to note that when a company decides to do a reverse split, that's typically a red flag that they are not doing well. You want to invest in companies that don't need to rely on reverse splits to keep their share price up. You want to invest in companies where the sales, the earnings, the production, or basically the overall health gets investors interested and excited, wanting to buy the stock and thus drive the price up naturally. All right, so that's what a reverse split is. Hope you all learned something. Thank you so much for watching.